Ashika Madam. She is Senior Manager, GST Department in Venu and Vinay from January 2021. She became an associate member of ICAI in 2013. She joined as a consultant in GSAP and Co. in March 2014 and added comprehensive exposure to the GST ranging from examination of taxability, compliance, verification, adjusting, and appeal and representation at all levels. She was a member of editorial board of a GST monthly bulletin by name Tax Talk, which is read by almost 30,000 plus chartered accountants and others. From these experts, let us learn more about type of GST inquiry, provisions under which inquiry, power of GST officers, rights of builders under GST, suggested approach for builders to face GST inquiries, followed by question and answer sessions. Now, I request Rajesh sir to take over from here. Thank you.
Okay. Good evening, everybody. At the outset, I would like to thank Vishwas and all other team members of RERA for having conducted this particular program regularly and for the benefit of members on a very continued manner. I think we got a lot of feedback from various participants in the earlier seminars that is helping out them well. In the same line, we are continuing with the same practice. We took up this topic of how to face the departmental inquiries and investigation, covering the and also what's the rights of the builder, how one has to answer to their queries, questions, what should be the approach. That was the entire, you can say, the idea behind taking up this topic. In the course of this session, firstly, Ashika will explain about the statutory provision. I'll pitch in whenever possible the practical side of it, and at the end, I will summarize practically what all issues can come, what should be our approach in that scenario. I think I will ask Ashika to take over and go on explaining the statutory provision related thing. Then I will pitch in wherever required. Ashika, please take over. I think you can present the PPT also.
Yes. So before jumping into the
Go ahead.
Yes. So before jumping into about the practical issues, let us have a little brief about the assessment, audit, and adjudication proceeding which is prevalent under GST law. So first part we will come to know is about various types of assessment under GST law. There is one self-assessment, provisional assessment, scrutiny of return, assessment of non-filer, unregistered person assessment, summary assessment. If you will see under GST, for each and every category they have divided, and on that basis they have provided provisions under the Act, and they have also provided the procedure or rules or the format which need to be followed by the officer, plus which need to be followed by the SSE also. Now in this section 61, 62, 63 is important. 61, which deals with scrutiny of return, it's basically the notice which is issued by the officer based on the detail furnished by you on the GST portals, or the data which are available on GST portals, which are they? GSTR 1, 3B, GSTR 2, GSTR 3B, GSTR 9, 9C, TCS return. So all the returns, ISD returns, all what you furnish on GST portal or which is available on GST portal, on comparing that, the officer issued under section 61 notice. What notice they issue is ASMT 10. I think so most of you who are here over assessment means in my opinion, you all must have received one ASMT 10 notice. You must have a test of section 61. But section 61 is basically the data which is available on GST portal. So it can't go beyond that. Means he can't ask you on the basis of audited balance sheet form 26. It can only ask you on the data which is available on GST portal and furnished by you. 61 is a one section where the notice is issued. Second section is 62, assessment of non-filed. So if you haven't filed your returns for 1 month, 2 months, it's depend. It's all they have automated. As you all know, if you don't file a return for GSTR1, now they have blocked you from filing GSTR3B. So you need to file one in order to file 3B, and 2 months, then assessment of non-filer, this scrutiny notice, they will issue it to you. Third is 63, assessment of unregistered person. Now, in this case, the common will be the landowners. Most of the time when the JD agreement is entered, there is a one landowner, one developers. So developer are most of the time registered, but somehow landowner being unaware of their GST liability, being unregistered SSC, may receive a notice under this section. So this is about the assessment under GST. Sir, you want to add something?
I think whenever this ASMT 10 is received, practically many a times the department officer will call, bring that details. When any detail explanation is given, they are not satisfied with it. They say, you bring that, you give this explanation. I will scrutinize your books of accounts. Actually, the provisions under section 61 does not give that particular authority for them to check and scrutinize your books of accounts or records. It's only a discrepancy, prima facie discrepancy, which is available on the information furnished by you in the returns, only can be the basis of this return. Though technically this is what is said, but sometimes it is better practically that we close the issue before getting too much. So if you think that you don't want to take too much risky, or do not want to take the issue further, if the issue, the details they're asking is also easily available and it is not going to create any issues, so you can also give those information, explanation, and better satisfy their ego and close the matter. Though technically sometimes statutorily something is not required to be furnished. Practically, if you think that it is going to resolve the issue, you may better give that information, especially the data or the figures and the comparative figure, reconciliation figures. If you can give it to close the matter, you can do it. But if they're asking much more details like balance sheet and all those things, I think the agreement copy, the contract copy, the JD agreement, then you'll be better cautious whether you need to give those information or not. I think from here, there's nothing further. We will go further and discuss other aspects.
Now coming to audit. This is another part where the department asks for the details or issue you a notice for discrepancy. Audit, there are two types of audit where the department come and do your verification. One is section 65, which we all know regularly audit has started. Now most of you must have got 17-18 audit notice, because as September 2023 is a due date, is a timeline for them to close the issue relating to 17-18, because newly now only they extended the time. So most of you must have received. So 65 audit, and another one is special audit. Special audit is the one where the department officer appoint a CA to do your audit. It may be due to the complication involved in your books of account, maybe the manner of maintaining the records or software, or any reason where it feels that special person is required. It may be chartered accountant, cost accountant, or it can be any special person, experienced person, they can appoint it for the purpose of this audit. Now in audit procedure is what has happened. is there is a knocking at your door. It's not that they will straightforward come and ask you to give the documents. First, the thing is they will issue you a ADT-01 where they intimate you that you have been selected for audit. So please furnish the document enlisted in the letter. So over here, before they do anything or before they verify or enter your premises, you get one ADT-01, one notice which help you to prepare to do your books verification before you submit it to the officer. So in ADT-01, they will ask you for the document. In that, they will also say you whether there will be visit to your premises or it is a tax audit, because it's not compulsory that every time audit will be conducted at the client premises. So if you will see the ADT-01, you will find either it is written they will visit the premises on this date, or they might also write that it will be a tax audit and you have to submit the document over there. Once the document submitted, obviously the audit procedure got initiated. Thereby, they will ask you for the document. They will raise the audit observation, ask you to give the clarification for the same. You have to submit your reply. Based on the reply submitted by you, officer may agree, may not agree, and then they will issue ADT-02, which is an audit report. Unlike previous resign, there was no mechanism where the officer was under obligation to intimate to you that what was his conclusion of the audit. Under GST, they are under obligation to intimate you what is the conclusion of their audit, whether they accept it to you, whether they didn't accept it, or if they didn't accept it, then it may be a case, it may result into issuance of show cause notice. So this ADT-02, which is issued by the officer, it is very helpful. Why? Because same issue will not keep opening again and again. You can show to the another officer. As we all know, under GST, there is a parallel proceeding. State has also been given the power to do the same thing, audit, verification, and investigation. Similarly, center also have the jurisdiction to do that. So if in audit ADT-02, your issues are covered. So in ADT-02, if your issues are covered, obviously you can show it to the officer that this is already issue is covered. It is already a standard issue. So there is no need to go again for the same. So this is basically the procedure which is followed under audit. Then come your inspection, search, seizure and arrest, which is the topic of discussion for today. Now, why we take you for the assessment and audit is important to understand. Under GST, they have given three things where they can issue notices and ask the SSC to clarify the discrepancy notice. First is assessment, what we discuss, which is more or less based on the data furnished by you on GST portal. Then comes the audit, where they go to the detailed verification. They ask the document from you and verify. The third one is inspection, search, and seizure. Over here, there is no knocking at the, you are not given any pre-intimation that SSC, I am coming to do your audit, get your books of account ready. Over here, they will come to your premises, and after coming to your premises, you will come to know that inspection is been carried out. So there will be no prior intimation from the officer that you have been selected for inspection. Now, the thing is that before moving into the integrity, which is involved in this section, let us first understand the basic of it. So, and inspections, search, seizure, it deals from section 67 to 72. Our topic for discussion is today 67 and 69, power to arrest, 70, power to summon, section 71, access to business premises. So start.
After you can just go to the previous audit slide. I want to just give something. Yeah, the audit previous one. The procedure of audit. Yeah, this next one. Next procedure for audit. Yeah, here I want to practically give some of the aspects which happens during the course of audit. Audit is carried out for a particular period, assigned period. It is unlike a enquiry or investigation, it is not covering the entire activities from the beginning till the present day. All those things are not. Audit is for a specific period. Generally, the purpose and intention of audit is not to unearth evasion or, for that matter, which is hidden by the taxpayer. The purpose and intention of the audit has to be understood that it is to identify some errors which has gone unseen or some misunderstanding. All those aspects, in the process of which there may be some points which may also come out, which are intentionally not paid, all those factors. Now, why I am giving this distinction of the purpose of the audit and the observation which comes out of audit vis-a-vis the inquiry investigation is the points which come out in the course of audit should not be viewed as some intentional omission, or everything should not be subjected to penal action or penal consequences. If some genuine error, if I had an intention to evade taxes, I would not have recorded the transaction in the books itself. So in the process of audit, something comes out. If the department is trying to say you intentionally evaded the payment of tax when we found out that in the course of audit, your first defense should be saying that if I had an intention to evade payment of tax or to avoid the taxes, I would have not recorded those transactions in my books of accounts itself. The fact that I have recorded those transactions in my books of accounts and my tax position was that on certain understanding it was not liable to, or by clerical mistake or omission, cannot be equated to intentional non-payment of tax. So that should be your defense, because whenever you have been proceeded under section 73, the penal consequences are lesser. The period up to which backward they can go is limited. So always you need to establish, whenever in the audit they try to invoke section 74, you should bring out specifically, we do not agree the fact that you're invoking section 74 because it was not done anything intentionally. It was an understanding with which we have as an industry practice, or why that error or mistake has happened can be explained. So this is one important aspect which you need to note down, because in majority of the cases where the audit report is issued generally in Karnataka by the central authorities, section 74 is invoked, whereas the state authorities are invoking section 73. To tell one example, even in case where the RCM liability was not discharged, they are invoking intention to evade payment of tax. The primary defense which is put across in those cases is, if I was knowing that that activity was liable for reverse charge mechanism, I would have declared that as output and declared the same amount as input tax and taken a credit. So I would have not lost anything. So non-payment is not due to intention to evade tax, because it's merely because of an ignorance. Therefore, there cannot be a penalty equal to the tax, all those things. And generally, they insist us to pay 15% of the tax amount before issue of a show cause notice, saying that otherwise it will be equal to tax. With a fear, people go ahead and pay. Please also see the other side of the coin. Once you're admitting and paying that 15% penalty, you're admitting that you had an intention to evade payment of tax. Even if you're agreeing to pay that 15%, please write a letter saying that we do not agree with the invocation of provision section 74. However, in order to avoid any future litigation and unnecessary litigation and the cost of litigation and the process of litigation, we're agreeing to pay this 15% to close the proceedings and not with an admittance of having any intention to evade the payment of tax. These type of explanation should be there when you are agreeing to pay 15%, even though they are invoking section 74 and you want to close the matter. And one more aspect I want to say, in the audit, they are supposed to look into all the information and collect all the information as much as possible. The whatever the data, information, documents, records collected in the process of audit will be the basis on which the notices will be issued in the later period of time if it goes for a litigation. So you be clear and sure that the documents and information which is being collected in that particular audit report and the information recorded therein are factually correct. And if there's any factual differences which is there in that particular observation, please bring that aspect on record, because later on, if you are not counting the facts at the stage of audit, etc., subsequently when the notice is issued, if you want to counter that figures, then you have to bring in lot of documentation certification in support of countering those observations, because those would have been based on your own records which you are not reported earlier. So these are some of the practical aspects you need to be aware when handling it. And when it comes to the issues, I'll explain furthermore aspects which we'll take it up later. Ashka, you can proceed further with the enquiry investigation inspection.
So coming to the part of inquiry, now inquiry cannot be taken as audit. There's a difference between the both. Under inspection, it's very important that there should be reason to believe by the officer that there is any suppression of transaction, or there is a suppression of stock of goods in hand, or either you have availed ITC in excess of what you are entitled, or you are indulged in contravention of any of the act with intention to evade a tax. So as Rajesh sir said that in audit, it is not mandatory that every time there can be intention to evade whatever points they identify. But in inspection, intention to evade is need to be there. The officer need to show that there is a reason, there is an intention to evade tax, then only section 67 can be invoked. Now in section 67 as said that it cannot be do in a routine manner. So in this, only when it is authorized by a additional or joint commissioner, then only inspection can be carried out. Where the inspection can be carried out, it can be carried out at your place of business or even at any other places where they have doubt that any of this circumstances have happened. Now in this inspection, if you will see, there is a one form called INS 01. So officer, when they visited your premises, they will be carrying that form. And in that form, they have to basically tick due to which reason they have come. They might come due to ITC access availment. They can come due to suppression of any transaction. But whatever may be the reason, he has to select. That INS form has a dedicated format. If it does not click and it just he came and he says and show INS1, it will not serve the purpose. It is not in accordance with law. He has to, in that it should specify for what reason he came for the inspection. So whenever any INS01, if officer come, verify what's the reason for invoking this section. Place of business is normally where you carried out your business, plus where you maintain your books of account, or if you are engaged through an agent, even the place of business of that agent will also be considered for the purpose of this act. Now, who is the proper officer? As discussed, officer who is going to come for the inspection, he should be authorized by the additional commissioner or a joint commissioner. Other than that person, if below person is coming without the authorization, then inspection carried out is invalid and any proceeding conducted due to that will also become invalid. another part is search and seizure. As they came out to inspection, they can search your premises and they can also seize the documents or goods. Now in this, it to be noted, only goods and document can be seized. When they can seize, when they believe that this are liable for like for goods, it should be liable for confiscation, and document they should feel it is useful for proceeding. Further, it should be secreted. It should not be the books of account. Like sir said that if it is visible in your books of account, you have accounted. You can't say that there is a reason to believe. You can't say there is an intention to evade tax. Secreted means it is either not recorded or it is kept outside the uh, view of the department. Then only it will fall under secreted. Then the documents he can seize is obviously goods, books, or uh, accounts, anything which he feels by way of which you are attempting to evade the tax. The documents or the goods which he has seized, he can keep it with him as long he feels that it is required for his examination. Which documents which are not relied upon, which are not the things he feels that is a reason for intention to evade, will be given it to you, and other documents will be which he supposed to be relied upon you for the purpose of issuance of show cause notice. That document he will keep with him, but it can keep up to only 6 months. Beyond 6 months, if he wants to keep, he has to keep the authorization from the commissioner. Then only he can keep for further 6 months. After that, he has to return those documents to you. Even the documents which has been seized or goods which has been seized can be released on a provisional basis on furnishing of bond or payment of tax, interest and penalty. Detention of goods. So where it is not possible for the officer to seize the document, or seize the goods, obviously he will issue a order in INS 03 saying that he is detaining that goods. So you can't deal with goods in any manner. If goods are of a such nature which are of fashionable nature or hazardous, then obviously the officer will dispose of those goods, and the amount which is recovered from it will be used against the tax, interest and penalty. And officer need to prepare the inventory of the goods which he has seized in INS 05. Now section 6710. Sir, I would like you to throw light on this section.
Actually, this is something which section 6710, which is one of the subsections dealing with this enquiry and other things. There they've adopted the provisions of CRPC, where any records which were collected during the course of the enquiry, search, seizure, etc., you can ask for a copies of that in order to defend your case. Where in this section, in this provision, it replaces the word magistrate by commissioner. So which means to say, when any notice or any documents, any notice of proceedings is initiated against you, anything, and it is consequent to an enquiry under section 67, it is suggested that you can write to the commissioner seeking all the documents which were part of the file which was there. So you do not know, many a times there will be some information which is collected and you have explained are not clearly forthcoming in the show cause notice, and there may be some observation which may be favorable to you in their note sheets. So if you call for a records of the enquiry file, then you can go through that and see anything which you can use it in your favor. So generally, any notice is issued, we write a letter to the commissioner asking for the documents, entire documents, relating to that particular enquiry which has been conducted in the file. So then if we collect that information, we can use wherever possible, which is in our favor. However, practically, I think still GS department is not well versed with these provisions. Many a times you may not get it, but however, it is your right to collect those documents information in the file so that if they don't give, then their proceedings can be questioned against the principle of natural justice. So you can keep this in mind. We have used this particular provision in couple of cases where we have still to get further details on that. Ashka can go ahead further.
Power to seal or break. Obviously, if you will try to stop the officer from doing his inspection, he has the power. He can seal and he can also break open and enter any premises. He can also the box or any almirah is any there. He can break open it. That's the power has been given to the officer under section 67. Now, as we said that the officer has power to search and seize the documents. As the document will be seized by the officer, then you may not be having a copy of that with you. So in the provision, it has been provided that if the document which has been seized by the officer, you can take a copy of it. And it is always advisable to keep a copy of the document which is taken by the officer so that you can know what are their information which is with the officer and how you need to go ahead with your case. But for taking the copy, you have to take it in front of the officer only. You cannot take without his presence. Test purchase is where the commissioner has, they can cause the any third person to go to your place and to purchase any goods or service. So this is basically done to identify how you are raising invoice, whether as a tax invoice, bill of supply, what's the HSN code, what the description you are giving, what the rate you are applying, to verify whether there is any intention to evade the tax or whether there is any of the reason to believe, which we discussed in the first part, that there is any suppression or is there any excess availment of ITC. To identify all those things, officer may authorize another person to do a test purchase. This is the
Ashika, I want to add something over there. This particular practice was there in the, provision was there in the VAT law. Now this is introduced similarly in the GST law. It is not only talking about a goods, it's talking about the services as well. From the context of the builders developers, I have come across a couple of instances where officers disguise themselves as a buyer of apartments, flats, and go and sit with the marketing team and try to understand, negotiate, try to ascertain the actual price, what it is sold, and they in fact collect the certain sample documents, all those things, and later on come back with those things as an evidence against the the taxpayer, saying that this is what you have been telling, and whereas you accounted the purchases lesser, or sales lesser, thereby you have evaded the taxes, all those allegations. In fact, why I'm emphasizing this is, since there is a statutory provision, the information documents collected through this process can also become an evidence which is admissible under the law. So we have to be very careful on any such differentiation which are being maintained, because there may be a gap in the understanding between the marketing team, the accounts team, and the management. So when though there may not be some intention to actually evade taxes, or there's no actual evasion of taxes, still with the explanation which the marketing team may be giving with their limited understanding of a transaction, or the accounts, which the way it is being accounted will maybe in conflict with the marketing team's explanation, and the policy which is implemented by management uh, is not talking to the same as is in the accounts, as is in the marketing team. So it is suggested that you as in a business have to ascertain all these are on the same page, especially after GST increase, because agreement to sell will be one document, is be something called a registration forms, which will be there, and there will be landowner share will be sold by the developer themselves. The marketing team may say, "Sir, it is our own flats, but actually, technically, it may not belong to them. They have been given only marketing rights." So sometimes what these marketing team people may say may not be factually correct. So where how you have to word your brochure marketing, train the marketing team is something which you need to be aware of and conscious and take care of it. Okay, otherwise there may be unnecessary issues which can get created if these actions are taken against any builder developer who is engaged in this activity. Yeah. Ashka can proceed further.
English knowledge. You don't have English knowledge. How to write?
So inspection form, as I discussed, first will be the INS 01. When the officer will come to you, it will come with INS 01. Where he will specify the reason why he has come and why he believes that there is intention to evade. INS 02, as we is about order of seizure. 3, order of prohibition. INS 4, bond for release of goods seized. And INS 05, release of goods or thing of perishable or hazardous nature. So these are the basically 5 forms which is dealt by in your section 67. The first thing which you should know is about INS 01, and you should check who is the officer authorized, whether he is a proper officer or not, and for what reason they have come. Because if we know what has happened, then it will be easy to check whether is any of this thing is there or not, or how to respond or how to go about with that verification. Then is the summon. If you will notice, most of the time officers issue summon to the directors or to the proprietor in case. So they issue, basically to most of the time they issue a summon to the directors asking them to produce the documents. Now it needs to be noted that every time whenever they issue a summon of section 70, it should be under read with section 67. It's not that they can issue summon to anybody as they wish. Summon can be issued only in the circumstance where they feel that attendance of the person is necessary to give evidence or to produce document. So where they feel that there is a case where there is an evasion of tax, where they have a reason to believe that you have suppressed your supply, or you have availed excess ITC, or you have contravened any of the provision of the act, in such circumstances they can issue a summon asking the directors or any other managing person, CFO, to produce those documents or to give evidence. Now it's important to know that when the officer issues summon, it's not that you can duck it. The summon issue is a judicial proceeding, and therefore it's a invoke the CPC Proceeding Act. So if there is any incompliances of summon, then officer can take recourse. Either he can go ahead and issue the notices without doing anything, or he can also go for arrest, but arrest is in special circumstances. It's based on the tax evasion, amount of tax evasion. So this is about the summon. In summon, you can't, if you give any false information, you may be liable for imprisonment. Then
Ashika, I want to add something at summons. See, I think this is where generally a tool which is generally used by the revenue officers against the SSC or a tool to threaten the SSE, you be aware that what all your precautions you need to take at the time of attending to summons. When you get a summons, summons is issued for you to give a evidence which is facts. There, you are supposed to go there and present and explain a factual things. If they ask you interpretation of law, they say, do you agree that you are liable to pay tax? See, that is an interpretation of a law. So there, that may not be having any actual value in the further proceedings. You can always say that it is my understanding, merely by the fact that you said I agree that I was liable to pay, but where the facts are clearly saying that it is exempted, they cannot do anything. So when you are explaining, focus on facts. If you are, they say, no, we are going to help you out, you please agree this, nothing is going to happen, it's merely a process, it's merely procedure. Please do not budge upon all those things. Stick to your facts, and if your facts are against you, then you have to fight legally. If the facts are in your favor, you need not worry. But if you give a wrong facts at that time, based on the understanding that you will be saved, you will be bailed out, I think you will be on a wrong presumption. So please be careful of the facts which you give at the time of recording of a statement consequent to summons. Next, if they forcefully, threateningly, they ask you to sign some statement which is factually not correct, then what is the remedy available? You are supposed to retract the statement as early as possible. Immediately after you got an opportunity to retract, you should retract. If you leave a time, say, which is the delay cannot be explained, why you did not retract immediately, then that retraction will not have a validity. You need to have a proper explanation for the time between the recording of a statement and the date of retraction. Sometimes there is a fear that if you go and retract your statement, again they will come and harass the taxpayer. Is a one more fear which is there. Some of the advocates do suggest, in such a scenario, you take a stamp paper on the same day, whenever the recording was same day or next couple of days. Show an affidavit of what all has happened and get it notarized then and there. Though you don't submit it to the authorities then and there, you can always bring this sworn affidavit on the immediately after that particular thing, the record of statement, as an evidence to say, see, I had retracted, but I had a fear of going before the officer of being threatened. So therefore, I've shown this affidavit before a notary on that particular day itself, or immediately couple of days, to say. So that can also as an evidence which can be equated to a retraction of a statement. This is also one more practice which are being followed. So you can see whether that is acceptable or not is again a question which comes up in the court, but at least there's something where you have said that I don't agree of whatever I said. I've told only under the coercion or under the pressure or under the threat can be established. So be sure, and generally what they also do is during the course of recording of this particular statement, they will say they will give a copy and they may not give a copy of it. So ideally what you should be doing it, you should take your diary or your notes, whatever is being stated there, you please write down what they asked and what you replied, so that you can come back later and look at it. And if you think that something which you are not clear about or you're told something which is incorrect, you can come back and say, no, I think I stand corrected with these facts. Next aspect is, whenever they ask you to give you details of so many things, if you are confirm some facts, it is not necessary that you need to tell the answer then and there. you can always say, sir, I am not sure about it. Please give me a time. I will check out, I will verify, and I will revert back with the explanation and documents. Even if they insist, no, you tell now, sir, I am telling probably it seems that it is correct, but I will reconfirm after rechecking. So at least leave that window open of you going back and checking and reconfirming. By chance, that also doesn't happen. After having come back, if you feel that there's something which is incorrectly which you are told, or there's some misunderstanding in your answer, you can always come back and do a correction immediately. But you cannot leave it, let it go for some time and then go on changing the whatever the facts you are told. So I think these are some points you need to keep in mind for attending the summons or the giving evidences for that matter. Ashika, you can proceed further.
Then come access to business premises. So, like we heard about section 67, which deals with inspection, where the officer has power to inspect the place of business. Similarly, section 77 also provide power to the officer to access to your business premises. So over here also, officer can visit your place of business, and over there they can inspect the books of accounts, documents which they feel is relevant for their purpose of audit or verification. Now in this also, this provision is separate to others, because in this provision also commissioner in this provision also you need the authority. It's not that any officer can come and visit your premises. Only when it is authorized by joint commissioner, then only the officer can come and visit your premises. Plus, if like we discussed in the starting about the audit, so in case of audit under 65 or under 66, either audit officer or if a CA or cost accountant is authorized as a special audit, they also can come and visit your premises and inspect the books of accounts to verify the GST paid by you. Then comes is the arrest provisions. Now arrests does not is like it will happen in each and every case. There is a specific circumstance under GST where arrest can happen. 5 they have specified where you have not issued the invoice and there is a supplier of goods, where the invoice which is issued by you is higher than what is required in order to allow the recipient to avail excess ITC, or where there is a bill trading or circular trading is involved, where tax collected has not been paid within 3 months, or where a person has already been convicted and again he is doing the same offense, then obviously arrest will happen. With this 5 thing, there is one more important thing is the amount involved. So amount should be more than 3 crore in order to invoke this arrest provision. If it is more than 3 to 5, then 3 years plus fine. But it is above 5 years, then it's 5 year plus fine. Even arrest need to be authorized by the commissioner. A person below that cannot authorize the arrest and cannot arrest you. So whenever any officer comes or any notice comes, it's very important to know the provision. Like we say, to know your customer, to know your client. It's very important also to know the provision under which those notices have been issued, because then only you will come to know to how you have to reply, what precaution you have to take, what are the powers of the officer, and to what extent they can proceed. Sir, over to you.
I don't want to add anything on the arrest provisions, because arrest provision is something has to be handled at that particular moment. Whatever we say will not work at that moment. They will be coming, but at the same time, I'd like to say that many a time there will be a threat of an arrest, but actually that is not so easy. They are also answerable to many things. If sometimes if they invoke that particular provision, and it is inevitable that you have to undergo that. Don't be panic. You just engage a proper advocate, and you have to face that particular thing, because I think if you have already been subjected, in fact, let me tell you, state, I have not come across any, any cases of arrest. It's only the central authorities who invoke these provisions. That too, not in all the cases they try to invoke this. They will only try to show this and try to collect the taxes, but in an extreme case only they resort to this particular provision, as per my experience. Ashka can proceed further. Ashka can just take up an issue and explain. I'll further explain what is the issue you tell. Then these are some things you need to know on what basis or what are the issues presently they are raising for the builders, developers, and how do we look at this and how do we handle this is something we'll just try to run through that quickly. Yeah.
The first part is disclosure in RERA versus GST. As we know, promoters, developers, landowners, they need to take RERA registration. While taking RERA registration, they disclose certain information about the cost of project, expected sales. So this all data which is furnished on RERA, they use those data and they are issuing notice by comparing it with GST. Now the notice may be issued, as of now what we have seen is ASMT 10. They are issuing under section 61. So as we discussed, section 61 is basically on the data furnished for GST. So they cannot go beyond that. So, but however, they are issuing this RERA notices and they are asking SSEs to pay tax. So if any of this notice has been received, the first thing is it is beyond the jurisdiction of section 61. Second, you can also furnish your reply that the data which is relied upon is the estimated first, and it does not give the clear picture. What is your current liability, current tax liability? What is the revenue you show? You report those and you furnish, incorporate in your reply and submit it to the officer. Second issue is R1 versus 3B. This is basically arising.
Ashka, I would like to add something in this RERA part. Okay. Yeah. I think as Ashka was mentioning, this information is, these type of notices are essentially coming from the state government, because RERA is under the state jurisdiction. They are able to collect the details furnished by you in the RERA. So they take that particular RERA information, the project cost which is declared over there is being compared. In fact, they would have given the period of the project also would have been there. So during that period, what is the GST sales which are disclosed? Actually, the RERA is talking about the cost, GST is on the revenue. Both are uncomparable. Point number one. Point number two, the first one is estimated, second is the actual. This again, sales is uncomparable to the purchases. And many a times, who would have been filed an application for RERA, I don't know to what extent of precaution and caution they would have taken to file these details in the RERA. So it is a submission, that a suggestion which is being made by us, that please look into the data workings, computation for the RERA purposes. And also when you furnish the details for RERA, try to reconcile and correlate to the extent possible with the GST details, the cost on the books of accounts. It should not, you get a certificate and all those things, but however, you also look at it from the GST perspective, whether the data furnishing, if later on comes for a explanation, whether we'll be able to give a reconciliation between those. I think these are some things which you need to take care. Otherwise, unnecessary, you'll be falling into unnecessary litigation. Because in one of the case, when I was speaking to the developer, he said, sir, I don't know what figure they have put, some unknown figure, but I don't think that figure is correct. But they themselves would have signed the application, which can go against. So be cautious and aware of what values they are disclosing to their authorities. Yeah, next you can proceed.
R1 versus 3B. R1 is your GST R1. This is basically arising due to improper disclosure. Because in case of where the construction service is there, there is 1/3 abatement value. Now over there, some of the builders or developer, while reporting their GST return, in GST when they are reporting full invoice value, and in taxable value, obviously taxable part. But while reporting in 3B, obviously we will report only taxable value and GST on it. So due to this disclosure difference, hence notices have been issued. Plus, where there is a sale after CC, so full exempt value is being shown, and exempt value being so high that also officers sometimes question based on the detailed furnish in R1 versus 3B. 3B versus 2A is an input tax credit. Basically, most of you must have received these notices. So though from 1st April 2019, no ITC is eligible for new project, but the project which were earlier going on or which got completed, or where the SSCs have opted for old rate and continue for ITC, over there this point need to be checked. If you should do your reconciliation, where reconciliation is not done, or where the data is only appearing in books. Now they have also came up with the circular 183 for 1718 and 1819, there where they have specified that even though the transaction is not disclosing in GSTR 2A, ITC may be allowed by the officer subject to certain conditions. What is subject to certain condition is fulfillment of section 16(2), invoice copy, receipt of goods or services, payment to the government, and filing of return. Now, payment to the government is that you must make sure your suppliers has filed your 3B. If suppliers have filed 3B, even though it is not reflecting in GSTR 2A, they said they will allow the ITC. Plus, where it's ITC from the suppliers are below 5 lakh, you have to give declaration from your supplier. And where it is above 5 lakh, you have to get a CA certificate. 9C versus R1 and 3B. Similarly, like we discussed for R1 versus 3B, 3B versus 2A. Similarly, they also are checking your annual return and they are comparing with the detailed furnished in R1 and 3B. If any discrepancy notice, they are issuing notices for that and asking to clarify or either pay the taxes. Project initiated prior to GST. Now, from 2017, though GST came, but some project may be initiated before pre-GST regime, which are getting completed under GST regime. So as the projects are completing under GST, allocation is being happening under GST. Officers are demanding to pay GST on such allocation. Now the point of dispute over here is what will be the tax payable, whether it will be pre-GST tax payable, service tax, or it will be GST. Second question, who will pay the tax on it? Is it landowner liability to pay or is it a developer? And what should be the value, whether we should go with pre-GST valuation or a GST valuation? Then comes your sale of developed plots.
On this particular aspect of the project which has started pre-GST and continued post-GST, one of the issues which in the joint development is that the liability of the developer to pay tax on the alleged construction services carried out by them for the landowner. Now, first of all, is there a liability? The more or less the law is getting clear that there is a liability on the developer, which is liable to pay on the construction carried out on the portion given to the landowner. If the already handing over had happened before GST, no GST is only service tax. So therefore, the service tax time limit is already over. So there cannot be any demand on this. Assume that the work was completed, only handing over had happened later. Whether the liability on the entire value will come under GST, my opinion is that no. To the extent of the construction which was completed prior to GST, that cannot be subjected to GST because the levy of tax was not existing on the activity being carried out. In this regard, I would like to refer to the decision of Honorable Supreme Court in the case of Wazir Sultan Tobacco, where the activity of manufacture happened before the levy was introduced. They said there cannot be tax merely by the taxing event is coming after the date of that particular infraction of levy. When there is no levy at the time of activity being carried out, there cannot be a tax on that. Similar view is also upheld in a couple of advanced rulings of Karnataka, where they have said the construction happened prior to GST will be subjected to old taxes. The construction activity happening after the GST will be subjected to GST now. So I'm just telling again, there can be an argument, many other factors, but at the thumb rule, you can keep these factors in mind so that at least the impact of tax can be reduced, because this is one of the major questions, because the landowner may not be ready to give or compensate for the GST, and the developer, for him, it's a bigger burden. So I think that is where you need to be look into this aspect and see whether you can take that plea. And second issue also on the valuation part in the JDA. What is the value of services provided by the developer to the landowner? Can that be going beyond the cost of construction by him? In my opinion, no, it cannot be. Though they have introduced the valuation mechanism post April 19, if somebody wants to litigate that matter, always I feel that if you are able to, give a clear ground defending that, saying that the levy cannot be beyond what you got or what you are giving, you can always challenge that. So these are some things which you can keep in mind in the litigation when the issue crops up. Okay, Ashka, you can proceed with the next point.
Sale of developed plot. Now, by way of circular 173, they have clarified that sale of plot is equivalent to sale of land, therefore no GST. Now the question problem arise over here is where before entering into an agreement, before making the sale of developed plot, is the person carried out the basic amenities over there, basic structure they do over there, basic infrastructure which is required under the Municipality Act. They make the land better for the purpose of sale. Now if agreement has been entered where it has been mentioned that there is a sale of plot with this basic infrastructure, so question were arising whether even though it's a part of partial of land, whether GST will be applicable or not. As being a part of partial of land, GST should not be livable. However, the department tried to tax on the basic infrastructure facility provided by builder to their buyers. So over here, how the agreement is structured is very important to identify the GST applicability on the same.
I think I need to explain this plotted development a little more. Though we covered this aspect in other sessions in detail, just briefly, in a own development, you are the owner, all you do is for yourself, and then you agree to sell the flat. Even if you receive an advance, it is nothing but advance for future supply of involved property as a land, so therefore no tax. When it comes to whether the advance or after completion, doesn't make difference. But Ashika, what she was trying to say is sometimes you try to separate the consideration into a development cost and a land cost. I don't know why it is done, but in practice, it is done. If that is the case, whether the cost of development is it liable for tax is a question. There, the recent advance rulings which have come in have tried to segregate that into two parts. One, the cost of development, which is as an essential requirement for us to do the development activity as per the approved authority, approval authority. Then it is a part of the land, is going into the land, and all those development carried out is for the authority, not for the buyer. Therefore, they cannot be subject to tax. Whereas, if you are doing any facility which is going to be enjoyed by the individual plot buyer, then that is what is the subject matter for tax, is what is ruled. I personally feel even that is get to be subsumed. Whatever is done onto the land is a part of the land, so it should not be taxed. However, if there is something which is collected as a clubhouse charges or a utilization of a common facility which belongs to the developer, then I think there's a chance of something being called as taxable. But however, that part of it, there is some issue or a litigation still there. When it comes to the question whether in the case of joint development also the same principle applies, the same principle applies between the developer and the ultimate buyer or the landowner and the ultimate buyer. But when it comes to the transaction per se, between the interface between the developer and the landowner is concerned. Developer is said to have been providing the services to the owner in the process of this development, and that would be probably a liable to tax. Again, there's a valuation issue. What's the value? All those questions will come up, which has to be dealt separately in detail. So for some of the participants, I also had asked a question. Even in joint development, if I receive an advance for sale of plots, am I liable to pay tax? Answer is no, if it is from the ultimate buyer. Ashka, can go on to the next one, please. Can we run through quickly? Because already we have crossed the time.
So then you can.
Yeah. GST on TDRs, again, transfer of development right. TDR in the commercial parlance is understood to be something which I get to build a super extra flows. That is TDR. But from the GST perspective, even the joint development agreement, it is understood to have some element of development right that is given by the landowner to the developer. That, in my view, is maybe going in for litigation. But as of now, they say there is a liability which is levy on the landowner. But however, there is a reverse charge mechanism on which the tax is said to be paid by the recipient after any agreements after April 19. The liability is on the recipient, that is the developer. Again, in this also, what's the value, what's the rate of tax? There are a lot of issues which we have dealt in other sessions. Maybe we will again deal with in the near future. GST on landowner constructed units, which I explained, whatever the developer is constructing is liable to pay tax on it. We talked about it. GST charges paid to local. Ashika, what is this point?
So local authority, RCM.
Okay. See, many a times we do pay a lot of fees, whether that is liable for tax. I think you need to look at the exemptions and also notification issued in section 7, where there is an exclusion from the definition of a supply. So if it is having an exemption, there cannot be any tax on that, either on forward charge or on the RCM. So, and also if there's some registration is required to be taken as per the any law, that also is excluded on the given exemption under the exemption notification. So there cannot be any tax on those things, especially planning charges, all those things. Some places they demanded, we gave an explanation, they dropped those demands at the threshold itself in the inquiry stage itself. Anti-profiteering is something which is there, where the buyers, though this provision was relevant for the initial ongoing projects, where the buyers expected the reduction of taxes due to the introduction of GST. Till now, whatever the cases which have been booked under anti-profiteering as a developer, I have not seen any case which is in favor of the developers. It has all gone in favor of the buyers. However, this provision is under challenge, and presently all these matters clubbed together and pending at the Delhi High Court. The matter was heard in detail, more than 20 issues are framed, and still those issues are yet to settle. Ashika, this input credit availment and reversal you can address. Then I'll address the last question and then we'll conclude.
Okay. ITC availment and reversal, over here we basically mean rule 42 and 43. Now, as we know, we are eligible prior to 1st April 2019, construction line, real estate business were eligible to avail the ITC. But ITC's availment is to the extent of taxable service provided. So there where the situation where the sale made after OC is not liable to tax. So as not liable to tax, that ITC, the common ITC, which is used for both, for supplying of taxable supply, that is sale before CC, and for supplying for exempt supply, that is sale after CC. So that common ITC need to be reversed. Now what is happening, some of the clients or some of the SSC, the reversal done is not proper. They haven't identified what the common ITC, how it need to be reversed. So that need to be taken care of, because lots of rule 42 or 43 notices are coming where the how this computation need to be done is either not properly done or not at all taken care. Plus, where the sale is happening after CC and the expenditure which are incurred after CC, those expenditure would not be eligible for ITC at all. But it has been noticed in in the instance that even after CC, the expenditure which has been incurred, SSCs are availing ITC on it. That should be, if you have availed, make sure you reversed it before you are selected for audit or any notice comes to you.
There that post completion credits, if it's a running project, pre-GST opted to continue there, the proportionate credit you may take it to the extent of bookings happened earlier and you're continuing to pay tax if it is in the completion stage. But whatever the relating to the flats sold after GST, you may not be eligible. I think there's a little caution you need to take for whatever Ashika said. You understand, examine how we need to reverse the credit. Ashika can proceed to the next one.
Condition of 80% is basically that builders have to ensure that they at least purchase 80% of input and input service from a registered person. So if they fail in this compliance, then the unregistered purchase, they are liable to pay under RCM. Now this compliance, some of the SSCs are missing out, because first thing, it need to be done on a project wise. It's not on a total. You can't take total of expenses incurred of all the project and then see 80%. It need to be seen on a project wise basis, and then you have to determine whether you have fulfilled this condition or not. If you haven't fulfilled, make sure you pay the tax under RCM for it. And even though you will pay under RCM, but no ITC will be eligible for you.
And Ashika, it's also on a financial year basis, right?
Yes, sir, financially.
Yeah, I think we are done with the presentation. I think any questions? If it is in a chat box, we'll address that.
Sir, there is one.
I'll answer that now.
If inspection is done and conclude the inspection with GST demand, the case is forwarded to audit department for issuing ADT1. Audit will be conducted on entire books and documents and not on the specific issue. Is there any way to object the ADT01 initiated based on inspection?
I think this practice, whatever is being questioned, explained, happens in the state government because they are adopting a methodology which used to be there under the VAT regime. That was under the context or the basis that there can be only one, it's a financial year based assessment. Now in the GST, there is no concept of assessment for a financial year. So the methodology which they are following is not necessary. It can be an issue-based show cause notice, but however, state authorities are still going with the old practice of the entire assessment year basis. So that's why they, whenever initial period, now they have changed their methodology, but initial period, whenever the inspection report used to be there, the report used to go for the audit. Audit are going to conduct the audit for the entire financial year and trying to ascertain everything, including other issues, if any, in detail, and then issue 8002. Please note, 8002 is not a final order. It is merely audit report. Further to that, there should be a show cause notice and with all the supporting documents and all the principles of natural justice and the principles set out in section 73, 74, and 75 has to be followed. In fact, you need not be worried by the fact that the audit is taken up. So you need to pay that amount, whatever is said in the audit. You can, in fact, you can wait for them to issue audit report and final show cause notice, which would have otherwise been issued at the time based only on the inspection report. Now, at least you're getting additional time and you may have a chance that the department may do various mistakes in the final notice which may come. So better that we wait for it rather than trying to object to that. Any other questions? If not, I would like to just sum up some of the things. Basically, in the process of any inquiry investigation, if some issues are raised, try to understand the issue. Don't lose your patience. Do not assume your own mistakes. Please go with whatever is given to you in writing, not by merely a oral explanation, asking you something or they explaining something. Even if they tell all so many things, ask them to give it in writing, and you may finally see what they would have been discussing with you when it comes to writing would have lost its gravity at most of the time. Second, having understood, you are checked whether the facts under which, based on which they are issuing or proceeding is correct or not. And strategically, you have to see whether you need to correct the facts at that stage or allow them to go in a wrong facts so that later on, after issue of notice, they cannot go back and change the notice so you can take an advantage of that. It's merely a strategy which you can look at. And whenever any issue is raised, don't try to merely talk. Go back, do your homework based on the documents, what your document says, what your agreement says, what your JDA says, what are all the other backup papers you have, and then assess what is your stand and position. It's also suggested that you may think that you know everything, but in this GST law, there are a lot of changes happening every day. So better take a proper consultation, 1 or 2 with an expert, and don't go merely with the one limited understanding of yours. And finally, you see practically whether to continue the litigation or settle the litigation by paying the tax, interest, penalties, or whatever it is, and try to settle and close the issues. Okay, I think with these, we wish to conclude. We once again thank RERA, LLP, and other organizations jointly who have organized this. And over to you, Vishwas. Also, thanks, Ashika, for Zenda presentation and supporting me.
Thank you, sir.
Vishwas, you're there? Okay, I think.
No. Sir.
Yeah, please.
Dear sir, Rajesh sir, thank you, sir.
Over to you, Vishwas.
And Ashika ma'am, thank you, ma'am. Thank you for your valuable time and educating us on response inquiry to the builders in light of joint development agreements. Dear participants, thank you for all in this session. Hope the session was informative and knowledgeable. If you have any queries, please do contact us. Thank you and have a nice day.
Thank you, one and all.
Thank you, sir.